With the escalation of war tensions in the Persian Gulf, there has been a sizable disruption in oil flows through the Strait of Hormuz. With this in mind, the Indian government as well as the Indian public sector refiners are being compelled to consider increasing their imports of Russian crude oil. This in order to ensure oil supply continuity. In the recent months gone by, India has cut down its oil imports from Russia significantly as a result of trade negotiations with the US. Now, with shipments through the Strait of Hormuz effectively suspended, Russian oil, still available in ample volumes, could be the option Indian refiners may have to go back to. Close to 2.5 to 2.7 million barrels per day that cumulatively account for almost half of India's total oil imports go through the Strait of Hormuz. These imports are mostly from Iraq, Saudi Arabia, the UAE and Kuwait. India is the world's third largest consumer of crude oil with an import dependency level of over 88%. The majority of India's gas consumption is also met with the help of imports alone. As things stand, India has crude oil and fuel stockpiled to last them for 6 to 8 weeks. With that, India is in a reasonably comfortable position just now in order to take care of near-term supply shortages, be it in the case of petrol, diesel or liquefied petroleum gas or LPG. It is only in the case of liquefied natural gas or LNG that India's cushion is thinner. This due to the fact that additional LNG stockpiling is significantly more challenging than crude oil and petroleum fuels. Apart from the heavy curtailment in movement of cargoes through the Strait of Hormuz, India's largest LNG supplier, Qatar, has also halted LNG production after a couple of its facilities got attacked by Iran. According to reports, the government is closely monitoring the situation and presently does not expect any notable LNG supply hits even if Qatar's LNG production is paused for up to 10 days. If the closure lasts beyond that, some additional measures like local supply adjustments may have to be explored. In addition to this, Indian oil and gas companies have actively begun scouting for other LNG cargoes from different sources and markets. The most obvious alternative Indian companies would be compelled to look at would be Russia, one more time. Up until now, Indian oil imports from Russia in the year 2025-26 have experienced a declining trend, although they still remain significant. Russia continues to be amongst India's top crude supplier, holding about 24 to 31.5% of the market share. This is worth $33.1 billion in the first 3 quarters of the financial year 2026. At its peak in 2025, the share was as high as 36.5%. Imports from Russia fell to a 44-month low to 1.16 million barrels per day in January 2026. This was a drop from over 2 million barrels per day during its peak in the year 2025. This largely due to the trade deal between India and the United States agreed upon in the month of February 2026. By contrast, during the same period, that is the years 2025 and 2026, China's crude imports from Russia have hit record highs. China's February shipment of crude from Russia is projected to exceed 2 million barrels per day as independent refiners capitalize on discounts and replace the reduced Indian purchases. Russian oil shipments to China reached a record of 2.07 to 2.08 million barrels per day, following roughly 1.7 million barrels per day in January 2026. Roughly 80% of Russia's oil exports were directed towards China and India in the year 2025. For India, apart from the option of getting oil from Russia, there is continued availability of Russian crude cargoes in the Indian Ocean and Arabian Sea regions. including volumes in floating storages. This volume built up was partly a result of Indian refiners substantially reducing their intake of Russian crude. Roughly 10 million barrels of Russian crude is available in Asian waters as per industry estimates. In February 2026, India imported 1.1 million barrels per day of Russian crude, almost half of what it imported at its peak in 2025 of over 2 million barrels per day. This as per tanker data from commodity market analytics firm Kepler. Loadings of Russian crude for Indian ports, which averaged 1.7 million barrels per day last year, was just 0.7 million barrels per day in February 2026. Coming back to the present situation in the Persian Gulf, the Strait of Hormuz handles approximately 1/5 of the global liquid petroleum consumption and global liquefied natural gas consumption trade. Late Saturday, Iran's Islamic Revolutionary Guards Corps, that is IRGC, transmitted messages to vessels saying that the strait has been closed, which led to a large number of trading houses, insurers, and vessels suspending shipments through the maritime passage to avoid any potential risk from regional conflict. A complete suspension or even heavy curtailment of oil and gas flows through the strait is bound to have implications for global energy markets, which includes India. The impact will essentially depend on how long the disruption lasts. Global experts, however, are of the belief that it is unlikely to be a protracted blockade or suspension.